Hi, everybody. Welcome. And before we get started, please click subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen right now for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So we've seen the market pull back a bit, and everyone's looking for investment bargains. And one big mistake that investors make, and one that I've made myself in the past, is assuming that just because companies get very, very big, that they can't get much bigger. People who thought Apple had maxed out at a $1 trillion market cap really didn't have that right. So, two that in particular that I really like right now are Amazon and Alphabet, also known as Google. Amazon right now has about a $960 billion market cap, so just under a trillion as I'm talking. And Alphabet has about a $1.3 trillion market cap as I'm talking. Both of those have pulled back considerably. Both companies were worth about $2 trillion at one point. So I believe that one of these, not Apple, one of these is going to be the first $5 trillion company in the market. I'm not 100% sure which one, but I think both have a very good shot. So let's start with Amazon. So, Amazon, it's really rare to find a company with not one, but two dominant businesses. So, we all know Amazon for its e commerce platform. I know one or two Amazon packages show up at my house almost every day. They have about a 40% share of US e commerce. Um, but there's a lot of room to grow that side of the business. Only about 15% of US retail is currently made of e commerce. Amazon doesn't have a huge presence in most overseas markets yet. The bulk of its revenue still comes from North America. And its margins have a lot of room for improvement. It doesn't generate very good profit margins on its e commerce marketplace yet, but it has improved over the past few years. Amazon, it took years and years before it even made a profit. So it's moving in the right direction, and I think there's a lot of more room for margin expansion there. So that's the e-commerce side of its business. The more exciting, in my opinion, is its cloud services business, Amazon Web Services or AWS. So AWS is about a 34% market share of the cloud infrastructure market. Just to kind of put that in perspective, Azure has a 21% share, Google Cloud has a 10% share. So it's a pretty comfortable lead. The cloud services industry itself is expected to roughly quadruple in size by 2030 as more and more of the computing we do moves to the cloud. So this is also the highest margin revenue by far in Amazon's ecosystem, and one that should get even more high margin as it grows. So one cool thing about AWS is that even if Amazon only maintains its 34% market share, which I think it has a good chance of increasing, even if it just maintains, that would 4x this side of the business and do wonders for their bottom line profitability. Because, like I said, this is very high margin revenue. And that's not to mention the potential of other businesses Amazon could establish a big presence in. Like healthcare, for example, is one they're really leaning into. And Amazon's not just e commerce, they have some in person shopping as well. They own Whole Foods, they've opened neighborhood marketplaces, things like that. So, a lot of optionality in the business. I think that Amazon still has a long way to go. So, that's Amazon. Let's look at Alphabet. Most investors know this as Google. There are two classes of Google stock that trade on the public markets. One is ticker symbol GOOGL, the other is ticker symbol GOOG. The first one has voting rights, the second one doesn't. Both have identical interest in the company. So, really buy whichever one you want. So, I mentioned Google has about a $1.3 trillion market cap today. And it is by far the more profitable of the two businesses. It's really worth pointing out. Alphabet has big margins. It has a 24% net profit margin right now. Amazon has a 2% net profit margin, just to put that in perspective. Google services, it has that includes the internet search business, that includes YouTube, that includes Android, that includes the Chrome browser, that includes Gmail, it includes pretty much all the consumer facing parts of Google, is where it gets about 90% of its revenue. And most components that I just mentioned have a dominant share of their market. Android is the dominant mobile phone browser worldwide when you look at market share. It's not Apple iOS, as a lot of people seem to think. Um, Google search has about a 90% share of internet search traffic. It's a dominant leader. Even on that side of the business, there's a lot of room to grow. The advertising market, which is where Google makes its money off those things, is about $825 billion in spending globally. Now, that includes things like print advertising, that includes things like cable TV advertising. But gradually more and more of those advertising dollars are shifting into what types of advertising that are easier to target. For example, Google ads can be targeted at whatever kind of demographic that the advertiser wants. Print advertising cannot. So more and more of that $825 billion market is gradually going to shift into the programmatic types of advertising like Google specializes in. So there's that. There's the Google Cloud division, which, as I mentioned when we talked about Amazon, this is the number three player in the market, has about a 10% share of the cloud infrastructure market. But I feel like they could really build that share over the coming years. This is the most exciting, the fastest growing part of Google's business. There's a lot of room to grow its share. And as I mentioned, the market itself is expected to roughly 4x in size by 2030. So even if Google can't manage to increase that 10% market share, there's still a lot of potential right there. There's the other bets segment, which generates no revenue right now for Google, but includes a lot of startup investments. Waymo is, in my opinion, the most promising. They're the autonomous vehicle startup. There are a bunch of other ones in things like healthcare and in things like life sciences, robotics. So they also have about $100 billion on their balance sheet that they could use to fund any other opportunities they see. It gives them a lot of optionality, especially because the business is so profitable. They're not as worried about conserving cash as some less profitable companies might be. So I'd love to hear which one you think is going to win the race to a $5 trillion market cap. I don't think it's going to happen overnight. My time frame for this is, in the next decade or so. I think one of these is going to get there, or both. Um, I own shares of Amazon right now. My wife owns shares of Alphabet, which I may add to my own portfolio, especially if the share price remains a little depressed for a while. But I'd love to hear what you think. Hopefully, you enjoyed that, and tune in next time. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.